Hey everyone, me Kevin here, coming to you from the Port of Long Beach. Boy oh boy, we have a crisis. The Nasdaq is down almost 4%, both the S&P and down nearly 3%. What is going on with our economy? Because it feels like it's collapsing. It feels like the Federal Reserve has absolutely zero control or even zero clue as to what the hell they're doing. Well, we've got a lot to talk about in this video. Not only are we going to start by talking about the Fed and rates, but we're going to talk about why they've lost control, and we're also going to talk about what just happened with the consumer credit explosion, and maybe we'll even touch about what happened with AMD yesterday, because that was another crisis. All these crises compounding, especially since when you look at the disasters and the escalation that we're seeing in Ukraine, Russia now pushing forward again more strongly towards the south, and in addition to that, the Chinese economy looking even gloomier and gloomier by the day. Some folks calling for a bottom, and then it just gets worse. Folks, I don't even know where to begin. I will say, though, I am wearing a prayer potion, so maybe it makes it a little bit better. Okay, let's start with this. First, there are now some folks on Wall Street, and this is scary. There are now some folks on Wall Street saying, hey, you know how the Fed said that at the end of 2022, interest rates would lift off from 0% and they'd end up at 0.9%? That's what they told us a year ago. Oh, we'll be at 0.9%. We'll barely have to raise rates to constrain inflation because it's transitory. It'll go away. You know, and to some extent, we still believe that some of the inflation caused by the COVID pandemic is transitory. Some of the issues caused by China and Ukraine and Russia might not be so transitory. Those were, as Jerome Powell told us in February, a quote, game changer. Well, some folks on Wall Street are saying, hey, remember how the Fed said 0.9%? Yeah, they were wrong then. They're going to be wrong again. And so then the Fed said, hey, rates at the end of 2022 probably get slightly above neutral, and we think neutral is like 2.5%. You know, maybe we'll have to go restrictive just a little bit for some time. We'll go to like 2.75, and then we'll be able to pause and sort of assess and wait for the data to come in. Well, then just last month they told us, nah, you know what, we're actually going to go to 4.6%. And we're probably not going to pause. We're just going to go to 4.6%. And then, we might have to go above that. We might not pause, so don't plan on a pause. But eventually we'll pause, and when we do, we're not going to U-turn and drop rates anytime soon. We'll stay there for a while. Okay, that's the latest that they told us. So in other words, every single estimate they've given us so far has been wrong. It's come in a lot hotter and stronger, and this is now leading some folks on Wall Street to say, we are not seeing inflation improve. We're not seeing jobs inflation improve. We're probably going to need the Fed to be wrong 2 or 3 more times. And that potentially means raising rates all the way to a Fed funds rate of maybe close to 6 to 7%. Most say that high inflation is never broken unless the Fed funds rate is actually higher than the nominal rate of inflation. The nominal rate of inflation right now is 8.1%. If the Federal Reserve raised rates to 8.1%, we would be in a depression. Inflation will go away, but we will be in a depression. It will be a complete disaster. And it's already turning into a disaster, and consumers are doing the absolute worst thing that they could potentially be doing right now. And that is spending more money, specifically on travel. Consumers are spending more money on travel. They're spending more money internationally on luxury clothing. They're spending more money on apparel. They're spending more money on cruises and going out and just blowing their money. Entertainment spending's going up. And so what happens when you look at people's credit card bills? Well, you look at people's credit card, and last month, what did we get? Well, we thought people's credit card bills and their outstanding debt would go up by $25 billion. Economists were wrong once again. Debt actually went up $32.2 billion. And if you go look up my last tweet, or one of my last tweets, at RealMeatKevin on Twitter, you'll actually see the chart of the growth of consumer credit every single month going all the way back to 1980. And what you'll notice is the chart has never been higher than where it is now. We're at insane peaks of consumer credit growth right now, at a time where rates are skyrocketing, and now we're estimating, well, the market isn't anticipating this. The market is anticipating terminal rates will be like 4.7%. But there are some Wall Street analysts who are saying, hey, the Fed funds rate's going to go to like 8%. That's insane. Fed funds rate goes to, 6% even. 8% would just be absolutely devastating. But even 6%, which is where you have a lot more of the bearish folks estimating right now, 6%, that 4.5's not going to cut it. We're going to cross 5, and maybe we'll get to 6, but then we'll peak out around there. That's just what some of the more hawkish people are saying. Nobody's really saying 8, with the exception of the people who are like, well, historically, we got to get the rate above what inflation is. But then again, maybe inflation will be like 5.9%, knock on wood, and then we get to 6%, right? Something like that could happen. But anyway, that's scary. And the last thing people should be doing is getting into debt more. This is absolutely insane. Like, this is the worst time to be getting into debt or borrowing for a new car or buying a home. Buying a home is like the worst thing you could do right now. It'd be so stupid. Ooh, that's a nice one. But anyway, it's a little express boat. But anyway, this is so annoying. Now they got this giant announcement going on over here. But anyway, hopefully you can't hear it. So what's crazy is that you are clearly going to be going into an earnings recession. And if you're holding stocks, you need to buckle up, because I'm not encouraging anybody to sell. And I'm not selling. I'm buying. But it's painful. And as I said in January, this is going to be a long process. And unfortunately, I've been wrong about the timing, right? I thought this process would have ended by now, that we would have seen inflation and inflationary figures from jobs start rotating down. It might take 2 or 3 times as long as we originally thought. We thought, okay, this is going to be, a 9 to 12 month hiking process, and then we'll peak out, and then inflation will finally come down and the Fed can relax. It's just not looking that way. So while it could still happen, maybe inflation will still peak out at the end of this year, and maybe the bottom of the market will come, which the bottom of the market usually comes 6 months before the bottom of earnings. That's really important to keep in mind. 6 months before the bottom of earnings per Goldman Sachs is usually when you see the market actually bottom. But anyway, we got to be a lot more patient than we anticipated. I think calling for, and it could still happen, but I think calling for, we're definitely going to see an end of the year rally. We're definitely going to see a Tesla rally Q3, Q4. I think those are mistakes. And, those are things that I've said, obviously without guarantees, but like everything's just taking a lot longer to get where we want it. And the pain is lasting a lot longer as well. So we have to be more patient and willing to survive the pain for a lot longer. So what does that mean? It means staying away from margin. Let's look at AMDs or really debt that could take us out. Like, you got to be a survivor in these times. Let's look at what AMD just announced. AMD, and we talked about this morning in our course member live stream, which, remember to join. Use that coupon code down below. If you look at my Twitter story, you'll see my Shopify complaints. It's like absolutely ridiculous how long it's taking to get this one product that we're trying to launch up on Shopify. It's just totally ridiculous. Customer service sucks at Shopify. I think they're cutting because they're so bloated. After I started using Shopify, I got actually initially excited because of all the bells and whistles they say they have. I got initially excited about the Shopify earnings, and I look and I go, oh my gosh, this is a terribly bloated company, barely growing revenues for the valuation where it is, and they need to lay off staff, and I think that's what they're doing in the customer service department. It's a complete disaster. But anyway, AMD, which we analyzed this morning in the course member live stream, also a complete disaster. We looked at their preliminary numbers, and oh my gosh, their PC division is plummeting. That's their processor division. So people are buying less PCs. We're starting to see cracks in servers, data centers and servers and integrated chips. And while they're still growing, the growth is slowing, starting to see cracks there. And the PC division is not crypto. Crypto is the gaming division. That was actually flat quarter over quarter. But quarter over quarter and year over year, you had a complete collapse of the processing division. Terrible. And part of that is because people are buying less, but the other part is because we're still having supply chain crises. And this is what brings up how the Federal Reserve is failing. So the Federal Reserve cannot do anything about nightmares here. They can't do anything about that. All they can do is raise rates. That's their blunt policy instrument to basically create more pain, reduce our wealth, and ruin our time. Okay? And every time I go on a vacation, a freaking stock market crashes. This is terrible. But anyway, this behind me right here, this is a logistical nightmare when there are fewer people available to drive those trucks, or they're demanding more wages. Well, fine, let them have more wages. I mean, I encourage people to get paid more money for hard work. And that is hard work out there. But boy, oh boy, even with wages going up, there still aren't enough people. It's insane. And so you have massive supply chain snarls that are just worsened by the fact that China's trying to be protectionist at the same time as their economy's crashing by more than a third. They're without doubt in a recession, although their statistical numbers are they're still positive GDP, 2.5%. It's just slower growth. This is bullshit. But anyway, the Fed can't do anything about the supply chain nightmares. So even AMD, even Tesla, right, complaining about logistical nightmares and supply chain nightmares. They're still going on. We have an oversupply of crypto chips that nobody wants, and an undersupply of chips that we need for things like cars, which is crazy. So we still have a massive supply chain mismatch. And the Fed, Marie Daly, whatever, told us just 2 days ago in an interview with Bloomberg, she said, hey, look, we think we control the demand side of the equation, and we think demand is responsible for 50% of the inflation we're seeing. Okay, fine. That means Every time you do a rate hike, it's only 50% as effective. And every time you hike rates 1% here, you slow down markets like Europe by like 1.6%. There's like a 60% greater effect on other markets than our own market from rate hikes. So in other words, you're hiking rates to lower demand. You have to lower demand so much so to actually be able to affect and try to get the supply chains to repair themselves. In doing so, you are crushing other markets. This is why the United Kingdom is experiencing, they just had to rely on their lending of last resort capabilities because they almost destroyed the market with the fall of the pound and the destruction in the bond market. Pension funds nearly going bankrupt. It's the kind of stuff that could happen out here too. It's scary. And so this is where I want to be very clear about a few things. First of all, clear your calendar for the first 2 weeks of December, okay? I want to meet you in New York. More details to come. I don't know what date yet. New York Stock Exchange, first 2 weeks of December. Be there, be square. Okay? Number 2, you need to survive. I'm not paper handing, people label me as a paper hand, flip-flopper. It's fine. I think that's a minority. I think a lot of people come here for intellectual perspective. So I shouldn't even be addressing the morons. But anyway, I'm not selling. I am a fan of increasing my quantity in these times, and it's very hard. It's very hard. I mean, I'm looking at numbers red that I haven't seen in my life. Okay, like, it's so red. It's terrible. But this is the time to build quantity, and that's exactly what I'm doing. I'm not going to let the emotions of what we have known since January was going to be a shitty 2022 affect what I believe the trajectory for the rest of this decade is. The rest of this decade is an opportunity to build wealth, buying at the bottom and riding stocks and buying real estate substantially cheaper than we'll ever be able to before. This is why we're hoarding cash with House Hack. We're not going to finance real estate at these rates. That's insane. Everybody else is going to get screwed in real estate, and we'll be the ones who have cash. We're going to have massive buying power. It's going to be amazing. If you're an accredited investor, you should join me. Househack.com. Read the PPM. That's your solicitation. This video is not a solicitation. And if you're non-accredited, don't worry. We're working on something to get non-accredited investors in, probably also by January. But folks, this is a time to be a survivor. Get out of debt. Increase your income. Like, you have to keep the grind on right now. Now is literally the time to get a second job. I know that sounds terrible. It's like, but things are so shitty. Exactly. The time to be euphoric and spendy is when things are a bull run. Like, okay, then go ride your private jet. Now, it's economy. Save every freaking dime you can. Stop spending money. I know that sounds crazy because that's just going to make the economy worse, but look, come on. In the finance community, how many people am I really talking to here? Okay, relative to all consumers across the United States or let alone the world. I'm not worried about moving the economy with my videos here. I'm worried about helping the people who do watch realize the pain could last longer. I'm not going to come here and say, this is it, this is the bottom. Tried that, didn't work. I was wrong. It was just wrong. It was just wrong, and it sucks. In hindsight, it's like, damn, best performing asset was cash, which is kind of what I said in January. I just didn't fully listen to myself. I only partly listened to myself. But anyway, be a survivor. Don't get margin called. Don't go bankrupt in this time. Stop hiring people. This is a hard message, but if your business is not going to survive under the payroll that you have, you need to cut. People got to get fired. I'm sorry. That's just the way it works. These are times not to be spendy. They're times to be thrifty. And I want you to be a survivor. I got a text message this morning from a course member. Sent me pictures of this store they opened up. Phenomenal success, awards, they're in the paper, everything, booming as entrepreneurs now. And they thanked me for a lot of my business insights. And I mean, huge shout out to them. I got to end up posting a picture of what they've got going on. Maybe we meet them one day. That'd be really cool. But, I want to hear stories like that from you. I hear stories like that from course members, especially those who join in, 2017, 18, 19. It takes some time to get there. It's not overnight success. But I want you to be that person that wins in 2028. I want you to be able to look back at 2022 and go, damn, that was hell. But now it's not. Wish you the best, and stay tuned for more updates. Thanks for watching. Damn it, Jerome Powell, you really screwed up. Let me make sure I covered everything. We talked about AMD. We talked about consumer credit. We talked about that 6% potential terminal rate. I mean, that could be a lot of fear-mongering and FUD, but, I mean, things are so shitty right now. Anyway, I think I covered it all. All right, I'll see you folks. Bye.